Yo, what is up, my YouTube family? Hope everyone is having a great trading week. In today's video, we're going to talk about what happened with gold, right? At the start of last week, gold had some crazy moves, and today I want to explain just what happened with gold and where I see it heading in the future. Before I get started, I just want to say we have reached 900 subscribers on this channel. Over the last couple months, I was busy working on the course, and I haven't been as active on YouTube as I would like to, but I do want to change that. And I just want to say thank you to everyone that has subscribed so far. I'm excited for the content that is going to come out in the future. And thank you to everyone that comments and likes all my videos. So with that being said, if you aren't already subscribed, make sure to do that because I will be uploading a lot more content in the coming weeks and months. And if you gain any value from this video, give it a thumbs up because that really does help grow the channel. So without further ado, let's talk about gold. So over the last basically year and a half, gold has been on a crazy bull run. Started out like at 1,200 an ounce, and now it's about a week ago, it reached over $2,000 an ounce. But given everything going on in the world, it makes sense. So fundamentally, gold is a safe haven asset. And so what that means is it's safe for investors to put their money there when things are bad. So when there's recessions, depressions, pandemics, when anything bad happens, investors buy gold because they know their money's safe there, where it may not be safe in the stock market, may not be safe in Tesla stock, it may not be safe in currencies, bonds, whatever. They put their money in gold. And so gold has been going up because there's been increasing signs of a recession. US and China clashing really set the world back economically. And now, of course, the coronavirus, and now that we're in recession, the world basically is in a recession, maybe even a possible depression, makes sense for investors to be buying up gold because of everything that's going on right now. So fundamentally, it makes 100% sense why gold would have reached $2,000 an ounce. It's the perfect storm. The last time gold saw a bull run was 2008, right? After that recession. So it makes complete sense why gold would be heading higher. With that being said, I see gold, and a lot of analysts see gold at over 2,000 an ounce again. So getting back up to those highs, and maybe even hitting $2,300 an ounce or even higher. Some project $2,500 an ounce. Some firms have even projected $3,000 an ounce. I think gold is going to at least hit 2,100 or 2,200 probably. That would be my guess. 2,300's a pretty good bet too. Anything more than that is a little rocky, given now that the stock market has hit all-time highs and it's heading higher. That's going to give investors a little less confidence to buy gold, where their money might earn a little bit better return if they put it back into the stock market, because it did hit all-time highs, broke them. That shows that there's some buying pressure in the market, right? So that's what I think gold's headed, right? Things are still really bad. I don't see them getting better for the short term. Of course, in the long term, things will get better. But yeah, I see gold heading higher. And it actually did hit 2,000 an ounce. It did actually recover quite a bit of what happened last week. But let's talk about what happened last week. What happened to gold? Why did it shoot down so heavily? Well, it's pretty simple psychology. So let's break it down. For those of you guys who are new to trading psychology, I don't necessarily mean with yourself, but just market psychology. Oftentimes when a market breaks an all-time high, which gold did, there's going to be what's called profit taking. So what that means is people who have bought, and now they have a really nice profit on gold. Once it breaks an all-time high, they say, okay, we have a really nice profit. It broke the all-time high. What does that mean? Well, it means it's vulnerable now. gold is a little bit more vulnerable for a major sell-off, major pullback. And so what does that mean? Well, if you had a really big winning trade, think about if you were in that situation. And by the way, these are not small investors like you and me. These people are banks and hedge funds and big traders who have a lot of money in gold, right? When I say profit, I mean, millions, maybe billions. I mean, a lot of money. Basically, they have a really large profit, right? And if you were in that situation and you had a lot of profit on gold and you saw it got up past those highs, you'd probably be tempted to take some profits. You wouldn't sell all your positions, right? Because it's heading higher and you want to hold your winners, but you would take off some, right? 5%, 10%, 20%, 30%, half, maybe 50%, whatever it is, you would take some profits. And that's exactly what happened. Some firms started profit taking, and because gold started selling off, some firms even maybe sold gold. Maybe they thought it was too high. And with that, other firms, again, more profit taking, more selling, more profit taking, more selling. It's just a cycle, and it just led to gold crashing, major profit taking on gold, sort of similar to what we saw in March, right? We saw a huge sell-off on gold, and that happened for a couple reasons, but one of them was profit taking. And another reason gold spiked down so heavily is because the stock market was approaching all-time highs. And what I'm thinking is investors wanted some more cash, right? Because investors a lot of times move their money out of the stocks and the market, put it into gold, and what do they do when they want to get back in the stock market? They sell their gold position, right? And so I think it was a culmination of both profit taking, granted it was massive profit taking, probably led also by some selling, so just completely crashed, which provided some nice opportunities if you understood fundamentally nothing was wrong with gold. Fundamentally nothing should have caused it to do that so aggressively. The only thing I could see that would happen in the future that would cause gold to do that is a vaccine. If a vaccine gets announced, a solid one from maybe like the United States, you could bet that the market is probably going to sell off gold pretty heavily. But regardless, there was nothing fundamentally to cause that. And so you would just see it as price action and profit taking and investors moving their money out of gold to prepare or maybe to buy, put their money back into the stock market, bonds, currencies, whatever it is. So for that reason, gold had a crazy week last week. So for those of you who are a little confused, I hope this sort of clears things up, explains it. Yeah, I definitely wouldn't be shorting gold. So yeah, guys, I definitely see gold hitting higher, and I hope this helped explain what happened last week and this week. So with that being said, if you gained any value, please give this video a thumbs up, and I'll see you guys in the next video.